The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Let's take a quick look at the German DAX. As you can see here, we've been in a real tight trading range since the 1st of March, up and down, up and down, up and down. We're right at just right around the 61% retracement now. Could go either way from this level, so we'll keep a close eye on that. But right now, nothing is happening, and we'll watch it very, very closely. The next one we want to watch, of course, is the one that's in the news all the time, due to politics, of course, is the let's call this the FTSE, folks. This is the UK market. As you can see, we've been also in a relatively tight trading range since actually way back in February. Slight downtrend because we have lower tops. We also have higher bottoms, so we're in a pennant. And we're actually forming a 135 pattern possibly right now, which means it could have some bearishness to the downside. With the things going on over there with Brexit, anything could happen. We'll cover the British pound here in just a minute, but we have to have some salutations here, folks, for some of our guests and a very, very dear friend of ours that lives here in Tucson. One of my students, Carrie Szymanski, has been named the Long-Term Trader of the Year for Timer Digest. If you'll notice down the list, we have Barry Rosen, who's been our guest. He's in Astro stuff. If you look down just a tiny bit farther, you'll see Tim Bost sitting right there in 6th place, which is really great. Now, Steve Rhodes has he's on the shorter term because he hasn't been doing quite as long. He's number 1 in the short term. So got some pretty sharp dudes in here, which is really nice. There's a great story about Carrie Szymanski. I met Carrie 25 years ago when I first moved here to Tucson. And he and his wife, Denise, are from Kentucky. And about 7-8 years ago, one of his buddies from Kentucky was on his way to Las Vegas to go to the money show. And Carrie was, I believe he was either giving a speech on pattern recognition or harmonic trading or something. But they went over together, and the gentleman's brother was also with him. There was a whole family of them. And the gentleman's brother got into a Hold'em tournament for $500, and he won a seat into one of the large World Series of poker championships. And the problem was he was a doctor, and he was at a convention there, so he couldn't play. So he gave the seat to his brother. And believe it or not, the guy who knew hardly anything about poker finished second and made $1.2 million. Now, that is pretty good. So I thought you'd get a big kick out of that human interest story. Folks, I wanted to take a second here with all the stuff that's going on over in Brexit just to bring you up to date on some history stuff related to Brexit that we get from our friends at Elliott Wave. This is showing the Britain's exit from India. That was back in January through December of 1949, January 1922 to December 1949. That was 130 months, as you can see here, the difference in these cycles. But if you go down and look lower, you'll see the timing of Britain's exit from the EU. What are we looking at? This was 110 and 88 months. One would not think that that would be the same thing, but the ratio between 130 and 83 is similar to what we have, 110 and 88. But I didn't get that much out of this chart, but they made a big deal out of it, but I didn't think it was that interesting. But I brought it to your attention because sometimes these things work and sometimes they don't. So you've got to be prepared to realize that you're the one who has to take the responsibility for these things. So use the information that you see fit, but remember, it's you are the one that makes the whole party work. So that's a key thing to look at. Now, we've got another one that we've been watching very, very closely. If you'll remember, we've been keeping a really close eye on this wheat market. We're now in May is now the spot wheat. And so we'll get up here and you'll see here that we're completing that big ABCD going back into July of last year. The actual number we were looking at was around 428. We got down to 427. Here's what happened, of course. We had a pretty good run in this. This was just the hourly chart. If you'll take a look at this week chart, you'll see that we had a really nice symmetrical 3 drive to a bottom down there at 427. We then rallied all the way up. We rallied 30 cents a bushel, which is a huge amount in wheat, considering you've dropped from 535 down to 425. You've dropped $1.10 a bushel, and you'd rallied back just a little bit. You'll notice that that rally back was exactly the 78% level of the C leg, just spot on there at 457. And so far, that has held the wheat. If you'll look at it this morning, we're already down. Whoa, just a second here. What happened? There we go. Just 1 second here. If you'll notice here, already this morning, we're already down 13 cents from that high. Now, the key level there is going to be at around the 441, 442 level. That's going to be the pullback where the original breakdown took out. But if it can hold that level, it's got a chance. Maybe there'll be a little bit of a rally. The other grains did not rally nearly as much. This was basically a short covering rally from what near as we can tell, but it was a very, very strong rally. We got a lot of that information from our good friend Simonley, and so it's going to be interesting what happens with this over the rest of the trading week, which you've only got a few days. By the way, on a programming note, we will have Norm Winsky as our guest on Monday, the 18th, and that'll be some fun. I won't be here on the 19th and 20th. We've got to do some things that'll keep me really busy, but we'll be back with you on the 21st and 22nd, but that's what we're looking at so far as we get ready for next week. But the 18th will be Norm Winsky. That'll be one that will be, I think, very, very interesting also. Let's take a quick look here at this British pound, folks. This thing is rocking and rolling. I mean, every time somebody opens their mouth over there, whether it's Theresa May or Jeremy Corbyn. Jeremy Corbyn is the equivalent of, I believe, Nancy Pelosi over here. Oh, I really shouldn't make that. No, shut up, Larry. Let's don't do that. Look what's happened here. After March, you can see on the February the 28th, we were making that big ABCD pattern up there at that 133.50 level. We then backed off. Sunday night, we opened at 129.70. That's down 440 pips from that high. We then rallied up to the 78% level. We went from 129.70 all the way up to 133, and then back down to 130. I mean, you've got 6 points, 3 points up, 3 points down, and then 1.5. It's moved 10 points, folks, or excuse me, 8.5 points in 2 days. And that's just when they're guessing on what the Brexit's going to be. So there's a situation. If you like volatility, that British pound is giving you all you can handle. The $64 question is, which way is it going to go? And I put in the big ABCD there just in case that happens, because if you got it down to that 129 level, that would be down at a 78% level of the big low, which was was a 78% on the weekly chart. So watch 129. Keep an eye on that one. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're going to talk a little bit about the crude oil, and when we're finished here, we're going to move on to the gold. We talked about this on Monday. It was a very, very bullish pattern. As you can see, we had the 3 drive to a top pattern. We then easily came down and made a beautiful Gartley pattern down at that 50% retracement, perfect ABCD, spot on at 54.60. And we mentioned that if you go below that 54 level, it's not going to be good. And we were sitting right on that downtrending line, which we felt probably had a good chance of breaking to the upside. And as we look at it this morning, we're starting to see that happening already. We're up around that, getting ready to take out the 57.90 level. That leads us up to that 59.90 to 61.20, I believe, is the ABCD structure on that to the upside if we get above those levels, and we're certainly heading that way right now. Whether the news means anything or not, I'm not sure, but the chart for crude oil is certainly pretty bullish. You know, it does look like it wants to to go a great deal better. We'll take a quick look here at the gold here. We've been waiting for this pattern in the gold to get up to that 1308 level. The high last night was 1309. We're now trading, I believe, around 1307. That is an ABC pattern. You can see the cycle lows there. There were 19 4-hour bars in between, so that's basically 4 days. And it's had a pretty good move right here, and we're going to check here to see if we have we have a interesting in the FANG stocks. Mr. Marshall Robinson from the city of I don't know the city, but I know it's the state of Washington. Anyway, we will look for that for you, Marshall. We'll be happy to take a look at it. But let's take a look at this gold here. You'll notice that we're right at that 382 level. It is a very, very strong resistance, at least it should be. Anything above 1315 would really be bullish for the gold, especially if we did it today or tomorrow. In other words, just a slight pullback and then a move. It could be, very, very interesting. That would be something that we'll keep an eye on. Let's take a quick look at some of these FANG stocks. We do have a couple of them in here that look pretty interesting. Let's take a look here at the Apple, because it started to move higher. We had a nice run yesterday in it. Let's get it up here and you'll see that we've already exceeded the 38% level. The next level we'd be looking at, of course, would be up around $10 higher, up around the $189. That would be the 50% retracement to the downside. The next one we're going to take a look at, let's look here at the most wonderful stock in the world, which is Google. And it is approaching had a big move yesterday. Wow, that must have been the reason why we had such a run there. Let's take a look here at Google. You'll see here that I don't do GDX, but can you tell me what GDX is? And I'll be happy to do it. And I'll look at platinum too. Happy to do that. There's you can see Google is up here near this 1210 level. That's another one that's still very, very strong. They've actually picked up a little bit. And then, of course, we've had Facebook is still facing that's an interesting comment. Let's look up here with the Facebook. And you'll see that it is still setting at the resistance level at that 173. That's a 50% retracement from the high, also a 78% retracement from trying to fill the gap. That's a very important thing. They're still lagging the market a little bit, but at least some of them have picked up. And finally, we'll take a look at the Amazon. And Amazon is all over the map. I mean, we got down below 1,600 and then immediately snap back above it. So things are rocking and rolling over there in Amazon land. So we'll take a look. Goldman Sachs. Yes, GS is Goldman Sachs. All right, let's take a quick look. First off, we'll start out with the platinum. We'll take a look at the platinum because we always watch the metals, and that's always been a good one. Platinum, of course, made that beautiful pullback at the 61% retracement down there at the 802 level. 812 level, and you'll see we've had a pretty good rally. We're trading around 840, 846 this morning. That's not quite the 61% retracement, but we'll get this up here so you can take a quick look at it here. There's the platinum. The 61% retracement comes in about $10 higher, so we've had a really good move off that 61% retracement, and it's going to be pretty interesting to see whether we can keep moving higher. This level in the gold, folks, is just so very, very important. And in fact, you really owe it to yourself to look at that gold chart on a 4-hour basis, because you'll see the 1.618 expansion from the move we had at 1301 down to 1290. That's $11 an ounce. What did it do? It made a 1.618 expansion of $11. That's $17, and we all know what that is. That's 1/2 of our harmonic number, and the price that it leveled to was 1309. The high has been 1309.40. That's why that one, I believe, is very, very important. So watch it. That's all I can say. It should be something that would be very, very interesting. I think the last one is the Flix, isn't it? Yeah, Netflix has been in a really tight trading range here for the past, it's been 2 weeks it's been here. So it's going to be interesting to see what that happens. We'll take a quick look at this, and you'll see here that we've been in that really tight trading range. Looks like we're going to be up very, very slightly today in these. Whether that'll happen or not, remains to be seen. Let's take a quick look here and move over to someone wanted to take a look at Goldman Sachs. Yeah, let's look at the banking index first, because Goldman Sachs is the leader of that index. We've had a little bit of a bottom in here. And remember, the Goldman Sachs, this is all about money, folks. So you really keep an eye on this, because this was the reason why we were so bearish in September. In September is because this was lagging the market so badly. So if we look at Goldman Sachs here, let's look at the banking index first. And oh dear, hold on just a second. What did I do? All right, there. Well, look, you'll see we pulled back on Monday. That was Friday, to the 78% level, spot on there at 96. We rallied a couple bucks. We're trading at 98 and change. So that's going to be an interesting one to see how much we rallied. This has been the leader of this market on the way up, along with the FANG stocks. Topped way in January. You see the big ABCD that we tapped out on January, topped out in January of this early year. And then, of course, we had the big break into December 26th, which was also an ABCD, and right at a 61% retracement on the weekly. That's why that one is so very, very bullish. Now, let's take a look at the Goldman Sachs, because It is the leader of the, by the way, Boeing is no longer the Dow leader, folks. I don't know who took over from them, but I don't believe it was Goldman Sachs because that's been hit really hard. Let's get this. We'll take a look at Boeing right after this, but here's Goldman Sachs. Boy, it has lower highs. This is not a bullish chart, folks. This is certainly not a bullish chart. We've only made a 382 retracement from the high and 61% retracement from the August high. But this is not a bullish chart for Goldman Sachs. So let's kind of keep a close eye on that. So we'll watch it very, very closely here. But this is certainly not bullish. That's absolutely for sure. And then the last one that we were going to look at was the GDX. Let's take a look at that one when we get back from our break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at coffee. You can see here the long-term ABCD pattern that is here. That measured to $95, and the low today so far has been $94.50. And it's, whether that's going to be the bottom or not, I'm not sure. Well, you notice we stayed there at the 96 level for several days. That was exactly at the 1.618 expansion number marked there in red. We then rallied just a little more than 4 cents a pound. Not a lot in coffee, but when it's at that level, that's quite a bit. Then it turned around and came right back down and made new lows again today. So what I usually do in a situation like that is to blow up the chart just to see what the pattern would look like on some expansion numbers. And if you'll notice here, since that February 25th low, we had a high up there at 101. And if you look at the 1.27 expansion to the downside on that, that takes you down to the $95, and the low today was $94.60, I believe. But the 1.618 of that 5-day move comes in at $93.50. So it's either bottomed right here, Bob, or it's going to $93.50. My assumption would be to wait till $93.50 because I prefer 1.618 numbers more than anything else, because that's the line of last resistance. Because if they don't hold that, there's trouble in River City. So your risk is actually the very smallest at that 1.618 expansion at 93.50. That's down 2.5 cents from where we are right now, and it dropped as much as 3 cents yesterday. So 2.5 cents is right in the calling card of another low today. So I would be patient enough and wait for 93 if I wanted to, find a bottom. The one thing we know for sure about this, Bob, is that Starbucks will not be lowering prices. And the second thing is it's going to give you plenty of chances to get in if this is the bottom, because it's going to have a long way to go. We were as high as $2 a pound, not more than about, 7 or 8 months ago. So this has had one heck of a correction, and it looks like it's some type of a bottom. But right now, I think trying to catch a falling. Now, there's too much fun going on in the currencies to even consider it. That's the way I look at it. Now, whether that's the right thing to do or not, I don't know. In fact, one of the ones that we look at so closely, of course, is the Canadian dollar, the gift that keeps on giving. And we're getting ready to break below the 133 level again this morning. We rallied up that big ABCD pattern up there at 134.60. We're trading around 133.20 right now. So we're getting ready to break down below that really key support, heading towards, it looks like, the 132.40 level. So we're 133 and change now, and we should be going down about another 100 pips. That would take us to the 132.40 level to see what's going. Right now, we're standing aside in the British pound. We sold that level up there at 133.50. We covered it 127.70, and it's been a lot of swinging in between, but we haven't done anything. We're waiting to see what happens. And we also have an order setting in there at 129 that I posted earlier this morning. That's that's down several hundred points, 290 points. That would be a case where they basically kick him out of the Eurozone instead of being asked to leave. So I don't know what's going to happen. Frankly, from just a gut feeling, I think what's going to happen is they're going to just scratch this off and say, forget this Brexit thing. Let's have another vote. And then we'll see how the other vote turns out. But boy, there's a lot of stuff going on. They're starting bombing again in Northern Ireland, which isn't good. So hopefully they'll get this thing all taken care of and get it straightened out. They're in about as much mess as we are, but I don't know if anybody can be in that big a mess. So we'll just keep a very, very close eye on that. But all of these currencies are moving around, and remember, the key to this, from our perspective, looking at just normal patterns, is this U.S. dollar index. This is where we were last Friday. We went out and we took out those highs of November. We didn't go anywhere. We closed lower the next day, highly indicative of a double top. That's why we focused on that. This is when the euro went down and made that 111.75 level, which was the 61% retracement on the weekly charts to the exact tick, 111.75. That was the 61% retracement on the long-term weekly charts. If you take a look at that euro on the long-term weeklies, you're going to see almost perfect retracements and from highs and lows. I mean, it's just really amazing how it hits these numbers. Even I get surprised. So And I get surprised a lot anyway. So we'll see, what the rest of these things are going. We'll watch it very, very closely. People keep asking me, is gold still bullish? To me, the key is at 13.15. If we get above 13.15, then you've got a really good chance to doing it. Right now, it's basically, trying to rally back. We made a low of 1281. We were expecting it to 1308. We got to 1309. So this is the key. We'll just see what happens from here. It's done exactly what we thought it was going to do. Whether it'll continue doing it or not, we don't know. But nobody else does either. That's the whole key to this. That's the real thing to make a sense of. Here's where we were in the gold just a few days ago. If you remember, we were talking about this on the air. I saved it just so we could talk about it. But look what we were looking for. We were watching it to go to 1308, and that's it. There's your ABCD pattern. You can see the nice 4-day cycle that was there. Those 19 periods, that's how many periods there are, 3.5 days in a 4-hour chart. So every 3.5 days, you had a nice little pullback. We didn't quite make the exact 61% retracement, which was unfortunate because that's where our order was. We were trying to buy at 1288. We only got down to 1290.10, and then it turned and made the move up. So what we'll be watching now is the key part of this was what happens next, because the pullback now is going to tell us whether this is just an ABCD in a bear market or this is part of the consolidation and bottom formation of a much, much larger move. And it's certainly possible. And the reason for that, boys and girls, is if you look at the move between February the 20th and into March the 7th, okay, that was down $68. We already talked about that. That's 2 times the $34, the harmonic number, $68 down, setting spot right on within $4 of the 382 of the whole move, which is pretty big in itself, well, way over 100 and some dollars. So that's the key here, because if it can get out of here, this is really, really bullish. Platinum's acting pretty good. Silver's acting a little better. So there's always that possibility. The key to me is 13.15. And the faster we get there, the better. If you got there today or tomorrow, that would even be very, very good. Now, if it's bearish, this thing is going to start moving back down again, and we're going to test the low from we went down to 1281. We rallied up $27 to 1309. And then the pullback on $27 would be what, 14? No, it'd be 17. So $17 down would take you to 92. And if we can hold 1292, then we've got something that we could look at. So those are the numbers that we're watching in gold. We're at this critical level. We'll see. And that's really what we're looking at. Hey, we got a break coming up already. Shut the front door and raise the rent.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I want to bring the piggy chart up. This is the June hogs. If you notice that bottom we had down there, we owe some thanks to our friends Cy Only and Mr. Z here in the den because they were pointing that out, that it was a beautiful retracement. And then with the swine flu that they're having over in Asia, there was an outlier event that could turn out to be pretty good, and the market's gone from 73. As you can see, we're up at the 61% retracement here now, which is a pretty substantial move. So this trade is completed, and we'll wait and see what happens after that. But that's just one of those. Sometimes they work, sometimes they don't, but that's the way it is. We've been requested here to take a look at the Dow Jones Transportation, and I think the best way to do that is to look at this on the weekly basis because this is one of the more clear patterns that we see here on these charts. You'll notice that we made a double top in the Dow Jones Transportation. The first one was in December 2018. Then, of course, 2017, we made the double top in September of 2018. Then the market breaks down, makes a B, C, D pattern, completing there on December the 26th. That led to a beautiful 135 pattern. This is an absolutely perfect textbook case, folks. The high between 0.1 and 0.3 is equal in time. It's also a Fibonacci relationship, the reciprocal of the square root of 4, 1.414. Is the square root of the square root of 1.414 is 707, and then the other high, which is equal in time between 3 and 5, comes in at 0.84. The difference between those in dollar amount is for trading is very, very insignificant. In fact, even between 0.618 and 707 is not not that too important. So someone asked the question, why do you even put that in? Well, these are the actual numbers that are built into the program, so you want to pay relatively close attention to it. So so far we've had a 38% retracement on the transportation on the daily chart. It's been relatively quiet. We'll let you see this one here so you can see it on the daily, but that's pretty much interesting to what happened. Last night I was interviewed by a group out of Melbourne, Australia, and they had some questions for me, and one of the questions from one of the listeners was rather funny. My answer, they thought it was rather funny, but they asked me how I used fundamentals, and I told them, I said, I really watch fundamentals very, very closely. I get copies of the Wall Street Journal and Barron's as often as I can, and they were rather surprised at that. And they asked me how I used it, and I said, well, I have a parrot named Walter, and I said whenever Walter needs something on the bottom of his cage, I always use those newspapers to give me some information. And of course, they thought that was rather funny, but I don't use any fundamentals at all, folks. I look at the news to see how it responds, just basically the headlines, to try to understand supply, demand, or any of that stuff. you don't really need that, because if you're looking at technical analysis, Dr. Andrew Lowe, proved this in his book, The Non-Random Walk Down Wall Street, that the markets are chaotic in nature, but within the chaos are non-random patterns that repeat over and over again and are predictable within limits. And that's what we're trying to do. And the key word there is limits, because you're never going to get 100%, but you try to get as close to what you think is a low-risk trade and go from there. So that's what we're watching here. And it doesn't necessarily mean you're going to get them right all the time, but you're going to get them right once in a while, and that's the whole key. Take care of your losses. The profits will take care of yourselves. That's the main thing, to take a look at. We've got another move down here in this Canadian dollar, which is rather nice, and we'll be watching it. By the way, right now, folks, the wheat that we just posted earlier this morning, we talked about that at the 441 level. We just opened there in the wheat about 10 minutes ago, and we're setting right at that really key level at 441, and the 61% retracement on this comes in just a tad lower at 440. So we're within about a penny of the 61% retracement of this 30-cent move that we had in the wheat yesterday. So we'll be keeping a very close eye, on that one. Gold's near the high now. We're up at 1308. High's been 1309.40, and if we get much above that, then we'd be looking at possibly, one of those moves, maybe above 1315 today. We'll have to see. But if it can do it, it's got a pretty good chance of doing it. So these are some of the ones that we're looking. Also, if you remember, when we were talking about some of these trades that some work, some don't, we were watching that move in the Treasury bonds. If you remember, we talked about that head and shoulders pattern, and we'll take a look up here. We'll see here, you see the ABCD pattern we had there at that 143.08 level. That's the right shoulder, just a tad above the 382 retracement. We've already taken out we've been as high as 116.18. We backed off a little bit this morning, but this looks like it wants to have legs. And believe me, it could, based on this pattern, and how bearish I am on Treasury bonds, based on this pattern, you could see 155. Because you've got a perfect head and shoulders pattern. I mean, it's as symmetrical as possibly could be. Your right shoulder is much higher than your left shoulder, showing extreme bullishness. You even have high translation on both cycles. You can see the cycle crested on the right side of that cycle between the shoulder and the head and the shoulder. That's another bullish sign. So, this is what it looks like. We stopped it right at that 430, 143. There's, that was the number. So, I don't know. We'll have to wait and see. But anything below 143, and this is not good. But right now, it's set up to do what it's supposed to do, and we'll see, how that works out. Marshall's asking, what is the key time today for AI? And that time comes in at 11 o'clock. 11 o'clock, right after magic time, which is between, 9:30 and 10:30 is amateur hour. So at 11 o'clock, watch to see what the S&P is doing. If we're above that 28.19 level, you don't want to have anything to do with it. We're above the 78% of that move now, folks, so it doesn't have a lot of bearishness also. I mean, it goes down 20 points yesterday, and before you can wake up in the morning, it's taken it all back and added some. So it's not acting bearish over there. The currencies are the easy ones to trade, because they're just bouncing around beautifully, whereas the stocks, they just have such a tremendous amount of bullish enthusiasm. You just about have to be a buyer, or they're going to leave you at the altar as a bridesmaid. So watch it very, very closely, because we could break out easily in these stocks and go a great deal higher. Whether it's related to the currencies, it probably is, and the dollar is certainly under pressure now. So that might be what's related to it. We'll see. And that's it. So we're watching this really very closely. So yes, I do watch the AI each day. I watch about 4 or 5 different markets using it. Try to find the ones that really line up the best. Right now, the only one that's lining up halfway decently, of course, is the market for the 11 o'clock time frame. In the E-mini S&P is the only one that looks interesting right now. The others are just too choppy. In other words, there's not a really key time during the day. There's up and down movement, and those are not the best time to look. You're trying to find one key time where it says this is where you, just like we were on Monday. Remember I said as long as we weren't above that, it was what, 27.66. I said if we got above that before 8:12 or whatever the time was, it was no good, and that's exactly what happened. We just kept rallying and rallying and rallying all day long, and that happens more often than you might think. So we'll take a break here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, under duress, I posted what the forecasts are for today. You'll see the one for Europe, and then you'll see the one for the U.S. Remember that they fail quite a bit, so pay close attention. If we're trading above 28.19 at that key time, which is in about a little more than an hour, you certainly would think that it's probably going to keep going up, but that's what it's showing right now. We'll just keep a close eye on it. That's basically, because remember, sometimes they work, sometimes they don't. The euro continues to move higher, folks. The dollar has definitely changed trend. That'll probably make a lot of things different, whether it's related to these Chinese tariffs or not. I have no idea, but the U.S. dollar has made a double top. There's just no question about it. That means that 0.618 on the weekly chart of the euro at 111.75 is spot on. We're already 140 pips higher just in a few days, so that's telling you that, it certainly wants to move above there. Now we're getting close to the 61% retracement here around the 113.30 level. And if it stops there, then that maybe it's just getting ready to go back down again. But right now, it's got all the earmarks of wanting to go higher. That's really what you're looking at. And the bonds, all they've done today is make a 38% retracement again down to touch that just below 146 level, and they certainly still look bullish. So maybe this is all interrelated. I don't know, but the charts is just really clear as a bell. At least if the bell is ringing, that's what we're looking at here. So keep an eye on it. That's going to be very, very interesting to see if this is going to be the case here today. Remember, we will have Norm Winsky as our guest on Monday, and then we will keep an eye on what he has to say. It was always good stuff, of course. And remember to do one thing perfectly today, and that is take care of somebody that has a whole lot less than you. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow.